Hello and welcome to this video on 100 Bagger. In this video, we are going to analyze Indiamart Limited. Indiamart, as you all know, is the first and largest B2B digital marketplace in the country. We have some numbers of Indiamart. Let us look into the numbers of Indiamart. It has a PE of 35%, whereas the industry PE is slightly lower, 32.5%. The cap is good, 15,000 crores market cap. It has a great profitability, 94.7 quarter on quarter variance. Sales, quarterly sales is also really good, and the PE ratio is slightly high. The return on capital employed is 23%, which is also really good. Look at the return of capital employed of 5 years, 37.5%. This is really good. And the quarterly sales variance is 18%, which is also awesome. On the numbers front, the key metrics of IndiaMart looks really good. There are some other factors which determines our decision making. The first is the market position. It enjoys a significant market share, facilitating a large volume of transactions. The revenue growth on year basis is really awesome. It's 21.3 percentage. It has a strong user base, over 100 million monthly visitors to its website. It has diverse revenue streams. Their main revenue is subscription fee from suppliers and advertising revenue from on their website. Major competitors. The major competitors of IndiaMart is Alibaba. There is a smaller player in this segment, Trade India, and there are some new entrants. They can impact the market share. However, from India, IndiaMart is the biggest player. So the other aspect that determines their revenue is the paying supplier versus non-paying supplier. Currently, the ratio is 2.3. It means that out of all registered supplier on the platform, only 2.3% are paying subscribers. This is a good news as well as a bad news. Good news because there's a huge scope for improvement, and bad news because they are yet not able to penetrate more than 2.3%. So the company is figuring out the ways to increase this percentage. Once this percent increase, the profitability will increase multifold. Apart from this, they are also investing in other areas. They have a huge mutual fund portfolio, and they also have investments in accounting. They have 100% holding in business accounting software, Busy. They have 26% holding in real books and 27.5% in Vyapal. They have also invested in Tally. They are giving some functions in Tally. Now let us look at the screener and let's see what IndiaMart figures looks like. So this we have already seen. Their P ratio is 35. Let's directly go on to the balance sheet of the company. Here you can see September 2024 balance sheet. So they have minimal borrowing. Borrowing is almost negligible. So this is a good sign. And look at this investment. All the money is sitting in the investment. So this investment is investment in mutual fund, government securities, and all fixed, mostly all safe instruments. The revenue, look at the revenue. It has been on a rise. Every year it is rising, and so is their net profit. This is a very good sign. When we look at the peer comparison, Indiamart has the best ROCE. You can ignore Wise Travel. It has given the best return amongst its peer. Pros is company is almost debt free. Company has been maintaining a healthy payout, dividend payout. So its valuation is a slight concern. It is trading slightly above its book value, but since it being a fintech company, or not a fintech company, a website, so that's why its valuation is high. The earnings include other income. The other income is the interest that they receive on their investment in mutual fund and the fair value changes on mutual fund investment. So this is not a con, really. It's a good thing that they have their investment income, which is giving them such a good revenue. Let us look at the cash flow. They have been generating good cash flow. In 2024 was the best year in terms of cash flow. All the cash that they are generating, it is uh, it is mainly going in the investing activity. In 2021 it went into the investing activity. And now looking at the shareholding pattern, we can see that DIIs has increased their shares slightly, whereas the public has reduced their share slightly. Otherwise, there's no issue as such on the shareholding pattern. So all in all, it is a very good fundamentally fundamental stock which we can invest. Let us look at the valuation. Let us look at the price of this share. So this is the daily chart of IndiaMart. So the long-term trend average is between 2,900 to 2,500. Currently, it is at the lower end of the range. So it's a good opportunity to buy here. And we are buying here assuming that there are no regulatory changes and the company continues to perform how it has been performing currently. And we must look at this level. Our stop loss would be 2000, 2300, and we could invest. This is the long term trend. So we can, if we are a really long term investor, we can have a deeper stop loss. We can have a stop loss of 2000, which is the low here, or probably this level 1800. We can have a deeper stop loss. All right, so that's all on the analysis of IndiaMart. Thank you for watching.